With the U.S. presidential election rapidly approaching, voters need to understand the candidates' tax plans. Today, I'm going to break down Vice President Kamala Harris's tax plan. If you want to learn more about Trump's tax proposal, then check out these videos that I've done recently on them so you can get a better understanding. But without further ado, let's dive in. All right, guys, as we know, President Joe Biden dropped out of the presidential race on July 21st, 2024, right in the middle of his campaign. And this has created a very interesting situation where Vice President Kamala Harris took over as the Democratic frontrunner for the presidential election with just a few short months to go and without actually winning a Democratic primary election. Ever since Kamala took over, she has given very few interviews and has answered very few questions to clarify her economic policies. This has left many people confused about exactly where she stands on important issues, such as taxation. However, she has made some comments throughout her campaigns, and she's also released a new tax plan in early September. So I'm going to break down her key points for her tax plan so we all know, what does the Harris administration believe in? Here's proposal number one. Taxing unrealized capital gains. Kamala Harris wants to tax unrealized capital gains for the wealthy, and President Biden originally proposed this, but Kamala has announced that she also supports this idea. If you do not know what an unrealized gain is, it's a hypothetical profit that you might make one day by selling a capital asset such as a stock or a piece of real estate at a higher price than what you originally bought it for. So let's just say, for example, if you bought Apple stock at $200 and it rose to a price of $300, you would have an unrealized gain of $100 if you never sold. However, you would only realize the gain if you sold it, thus locking you in on the $100 profit. But by taxing unrealized gains, Vice President Harris would be taxing fictional profits that you don't technically have yet in your possession. Remember, the price of assets like stocks, precious metals, real estate, bonds, they don't always go up. Sometimes they go down. So yes, you might have to pay capital gains taxes on assets you actually lose money on in a Kamala Harris presidency. Taxing unrealized capital gains is an extreme departure from current tax policies, which only tax realized capital gains. It is important to note, however, for now, this tax proposal would only apply to families with a net worth above $100 million. Under the Biden-Harris tax proposal, families with this amount of wealth would owe up to 25% in taxes on unrealized capital gains, depending on the tax rates they are already paying. They will owe a 25% minimum tax that includes unrealized capital gains. Now, why are taxes on unrealized capital gains concerning? I know some of you out there are probably thinking, I love Kamala and I don't care if she taxes unrealized capital gains because this will only apply to the ultra wealthy. If you fall into this category, I got some news for you. Regular income taxes also started out as applying to the ultra wealthy, but I'm guessing most of you watching this video currently are paying income taxes even if you're not ultra wealthy. When income taxes were first put into place in 1913, they originally only applied to the top 1% of Americans. Then, once the government got people used to that idea of income taxes, it started applying income taxes to the vast majority of workers in America, not just the top 1%. So if you think that taxing unrealized capital gains will only ever apply to just the top 1%, you might need to think again. If they get approved for families with over 100 million in wealth, it could very easily be changed to families with over 1 million in wealth or 100,000 in wealth. You get the point. I also think that taxing unrealized gains sets a dangerous precedent. Under this policy, the government would force you to pay taxes on money that you actually haven't made. If the government can force you to pay taxes on money you haven't made yet, where is the line for what is able to be taxed? Will it force you to pay excise taxes on cars you haven't bought? Will it force you to pay sales taxes on items you haven't purchased? Will they force you to pay property taxes on properties you don't own yet? Where is the line at? Another concerning thing about this tax policy is that it does not appear to include a tax refund for unrealized capital losses. It seems only fair to me that if the government is going to tax unrealized capital gains, it should also refund unrealized capital losses. I mean, people who are ultra wealthy often view taxes on wealth, like this new tax that Harris is proposing, as an unfair punishment for being successful. When the wealthy feel that they are being punished for their success, they often flee to areas with better tax treatments. Many millionaires and billionaires could simply leave the country if they don't like the idea of their unrealized capital gains being taxed. Millionaires and billionaires create tens of millions of jobs in America. So the more of them that leave the country, the more dangerous it is for our entire economy. It's also worth noting that many wealthy people will most likely be less willing to buy stocks, invest in real estate, or otherwise take risks to generate capital gains if they know they will lose up to 25% before they even take their profits. Okay. Let's move on to Kamala's second tax proposal, because the capital gains one got me pissed off. The second proposal is raising the corporate tax rate. Kamala Harris also wants to raise the corporate tax rate from 21% to 28%, which is almost double what Donald Trump is proposing. Now, if you are a business owner, you could expect to pay significantly more in corporate taxes if Kamala Harris is elected and if the tax proposal goes through. Now, this is another controversial issue. A lot of people believe that raising corporate tax rates is a good idea because it forces successful corporations to contribute more to the federal government's tax revenue. Kamala Harris has been arguing that this will help to reduce our national deficit, which, if you are unaware, has gotten insanely out of control. Currently, the United States national debt is $35 trillion and counting. Again, the problem with raising taxes as a solution to our government's financial woes is that it destroys some of the incentive for people to create businesses in the first place. The less money that business owners get to keep, the less motivated many people will be to start businesses, to innovate, to create new jobs, and just to keep the economy going. I've said this so many times in other videos. Raising taxes is not the only way to fix the country's financial problems. We can also dramatically curb spending. There's more than one way to improve the deficit, but that's in another discussion for another day. Let's talk about proposal number 3. No taxes on tips. Donald Trump famously announced that he would eliminate taxes on tips during his acceptance speech for the presidential nomination at the Republican National Convention. Kamala Harris, who usually disagrees with almost everything Trump says, apparently liked this policy and quickly copied it. She announced that she would also eliminate taxes on tips for hospitality and service workers weeks after Trump did. So, if you're someone who is a tipped worker, such as a hairdresser, server, a bartender, a caddy, then you could soon not have to pay taxes on your tips regardless of who wins the election. Okay. Now, of course, whether Trump or Kamala wins, this tax proposal would still have to make it through Congress to become law. Here's proposal number 4, raising capital gains taxes. In addition to adding a tax for unrealized capital gains, Kamala Harris also wants to raise the long-term capital gains tax rate for Americans earning over $1 million per year to 28%. This is 8% higher than the current 20% long-term capital gains rate for high earners. If the proposal passes, it means that long-term capital gains taxes would be higher than they have been in decades. However, Kamala's new proposed tax rate for long-term capital gains is lower than the rate that Joe Biden wanted to raise it to, which was 39.6%. When you include the net investment income tax, it's almost upwards to 44%. So Kamala Harris has actually deviated from Joe Biden on this issue. But for all of you stocks, bonds, commodity, cryptocurrency, and real estate investors out there making more than $1 million per year, just be aware that Kamala is coming for an extra 8% on your capital gains taxes. Here's proposal number 5, an expansion of the startup expense deduction. Although Kamala has proposed raising the corporate income tax rate to 28%, she's also proposed expanding the startup expense deduction to $50,000 in speech in New Hampshire on September 4th. Currently, this deduction is only worth $5,000. This deduction helps new small business owners afford various startup expenses. You get to deduct your first $5,000 in startup costs. Kamala's expansion of this tax deduction is designed to help new small business owners cope with the roughly $40,000 that it takes on average to launch an enterprise. During her speech in Portsmouth, New Hampshire, where she outlined this new tax proposal, Kamala claimed that she wants to see applications from 25 million new businesses if she takes office. What's the bottom line for Kamala Harris's tax plan? Okay, Kamala Harris wants to raise a lot of taxes, but she also wants to throw in some interesting tax breaks. Some of her tax hikes are not as extreme as those proposed by President Biden, but some of them are, such as the new 25% wealth tax, including taxing unrealized capital gains. If all of these policies became law, millions of people, and especially high earners, would pay much higher tax rates. So, if you love working harder and harder only to give more of your money to the government, then you might find Kamala's tax policies very appealing. If you don't, then at least you could potentially save some money when starting a new business if Kamala becomes president. Nice. Now, here's a question from a subscriber. Since we have discussed capital gains tax rates heavily in this video, I'm going to answer a question that came from a user. His name is JTNMom06691. That was asked on my capital gains tax rate 2024 video. The question was, I thought the 0% tax rate on long-term capital gains only applies if the property was held for 2+ years. So the answer to this is 0% capital gains tax rate is based off of a bracket of how much capital gains that you earned in that year. You can graduate from the 0% bracket to the 15% bracket, and you can graduate from the 15% to the 20% bracket. But at the end of the day, it all comes down to how much capital gains that you're exposed to will determine how much capital gains taxes that you pay. And if you had a property that you were utilizing as a primary residence for 2 out of the last 5 years, you can receive a $250,000 capital gain exclusion or a $500,000 capital gain exclusion if you are married filing joint. Now, that's all I got for today's video. I would love to know what you guys think of Kamala Harris's tax plans. Let me know in the comments below on who you're thinking about voting for. Where does your heart lie? Do you believe in these unrealized capital gains taxes? Would you like to see this $50,000 startup cost go through? I want to hear your thoughts in the comments. Let me know. And as you guys know, like, comment, subscribe. I'll be making more videos for you. I'll see you guys in the next video. Cheers.